Hi, I am Ashley Ham, and I am located in Tiffin, Georgia. Uh, Live from my office at Kincaid Insurance Agency. I've been in insurance since 2004. I've been with Kincaid Insurance for almost 11 years, and we specialize in auto, home, life, business, and farm insurance. So we do a little bit of it all. The only thing we don't do is health insurance, but we try to help our customers out as much as we can. When they give us a call, we try to make recommendations. I know here lately we've had questions come up about not having enough insurance. We've had some clients that were carrying the state minimum limits, which here in Georgia is 25,000, 50,000 on the liability limits, and we've had some clients, that's gotten into an accident where they were carrying the state minimum, and the claim went over their policy limits. So therefore, they may be sued by the person that they hit so they can get their money back. So we, in our office, we always recommend 100,000, 300,000 is what we recommend when people call in. We do have some, if it doesn't fit in your budget, then maybe look at 50,000, 100,000. Most of the time, there's not enough premium difference between the state minimum limit to 50,000, 100,000. Where you just want to go ahead and do the higher coverage. Most of the time it's not going to save you a significant amount of money where you would want to take the risk of doing the state limit. We also do home insurance. We do have several carriers. I know a lot of people ask about dogs. We do have several carriers that do have ineligible breeds of dogs, like cows. A very popular one is pit bulls. We have some shepherd dogs, German shepherds, Australian shepherds. So some of those.
Hey, Ashley.
Hey.
Thank you for that information. I know on my last show, we had some questions about a particular breed of dog, and they were having to sign that exclusion. And yes. I really see people, and I know you do too, sign exclusions, because that means there's no coverage if that dog bites someone or if someone gets injured in school.
Yeah, and it keeps the carrier covered, and as long as the insured is aware of it, they've signed it. So that's kind of the route we're having to go with some of our companies these days.
Yep. And what about renter's insurance? I know I talked to somebody that didn't have it, and they were in Florida, but how affordable is that?
Very affordable. Most of our policies, you can get $25,000 worth of coverage, which is kind of the base where we start, for $150 a year. And it's surprising how many people do not know about renter's insurance, or they do know it, think that it's super expensive, but when in reality, it can range anywhere from $10 a month to, depending on how much you go up in coverage, to $25 a month. So it's very affordable. And if you have your auto insurance, then you get a multi-policy discount, which saves you money here as well.
Yes, and their renter's policy also provides some liability coverage as well.
That's right. So if someone were to get hurt, then they also have that if they were to get sued.
Very good. So I know you do commercial insurance. What type of businesses lately have you been insuring?
Lately, we have been insuring rental properties. We have some that do property management. We, have rental properties. We've been writing some offices, like lawyers' offices, and those types of risks. Commercial auto for contractors. We've been writing those. For your like plumbing contractor, electrical contractor. So those type of risk is what we've been seeing here lately.
Oh, very good. And farm, I know you said farm policies. So
yes, so we do have farm. Auto Owners is probably one of our top carriers with farm, because they can package your home, your equipment, any barns that you may have. We do have some farmers that have rental properties, so you can, it's just like a one big policy that can kind of put everything on there so it's not confusing. You're just paying one bill per month, and we can schedule equipment on there. If it is if the equipment is 5 years or newer, you can get replacement cost on it. I believe is what it is now, 5 years.
Okay. And it is important to schedule equipment, even on a home policy, scheduling jewelry, guns, and on a farm, scheduling those big equipment items, because it's not coverage either.
That's right. And a lot of people don't realize, like you said about the guns and the jewelry, there's only, most policies 2,500, some aren't even that high of coverage. And if you have an expensive ring or necklace, if it's not scheduled, then you're out a lot of money, especially if it's an heirloom or something like that.
Right. Well, we had a question come in. How much coverage do you suggest for my car insurance? And I looked up some state minimums. I know we're in Georgia. You talked about 25, 50, 25, and we don't recommend anybody drive around with the state minimum. Florida
Right.
it was 10,000 personal injury and 10,000 property damage. Alabama is the same limit as Georgia. Tennessee is similar to ours, but they have a 25,000 bodily injury, 50,000 total, but only 15,000 property damage. So I know,
Wow.
yeah, very surprising. I bet you if you've done something lately, but you can't find very many cars less than $15,000, let alone $25,000.
And it is sad that it's come to that, but that is a good example we give people when they want to do state minimum. And like I said, I understand if you have a budget and that's all you can afford, then that's what you need to get, so you do have coverage on your vehicle. However, like I said, there's not much difference bumping it up to 50,000, 100,000. But like you said, the vehicles are starting out just 25,000, 30,000. It's ridiculous just for a used car or truck.
Yep. Very good. And if you combined your home and auto, even home and auto and a life insurance, those discounts kind of add up a little bit and help when you want to up.
Yes. And sometimes the amount of savings you would get to put a life insurance policy with your home and auto, a lot of times will pay for a life insurance policy. So we have had some customers here lately that their multi-policy discounts are so much that they could basically get a free life insurance policy. So that's always good to look at. And I know life insurance is not tangible, but it is very important, just like your home and auto.
And another question, should I insure my valuables separately, or will they be covered under my home insurance policy? So the things that you need to schedule is jewelry, guns, expensive artwork.
Yes. Furs, I know, I have some customers that have expensive furs, expensive silverware pieces. Any of that has a specific limit on the policy, which, like I said, I think is 2,500 or less for those items. So if you had a claim where someone broke into your house or a fire loss, you lost all your guns, all your jewelry, you would only get $2,500 or that set amount unless you have it scheduled.
And when you're looking to schedule those on your insurance policy or your renter's policy, what type of information do you need for guns, for jewelry?
So most of our companies, if it's over a certain amount, like if it's over $5,000 jewelry, then they would like an appraisal within the last 3 years. And that's how the limit they would go by on that. And then your guns, we would need the serial number, type of gun it is, and the value that, that it would probably be today. And then on the jewelry, we would need, I know it doesn't really have a serial number, but just a brief description of what it is, and then how much coverage. If it's less than 5,000, like I said, you don't have to have an appraisal, and you just put on there if you had a gold watch that was $1,500, and that's the amount you could put on there.
Very good. Very good. What about young drivers? You know, I know a lot of people, when their kids go off to college, if they don't take a car with them, I remember people asking, oh, well, I can take them off my policy, but they're off because they're off in college and don't have a car. What do you recommend for college students?
For college students, we still recommend them to be on their parents' policy. If that way, if they come home and they're driving their parents' policy, then they're covered. Once they move out of the house, once they get married, then, you know, we suggest that they go ahead and get their own policies and just make sure the vehicle's registered for them. We have been running into that a lot lately, that, you know, the registration and the insurance, all that has to be in the same name.
Very good. And then when they go off to college, their personal contents are covered under their parents' homeowners policy in the dorm, but that changes when they get into a rental house or a rental apartment, right?
That is correct. So it's normally 10% of the content coverage that extends to them while they're in the dorm, but we do have a lot that have homes that they are sharing. You know, their dad or mom buys the house and they rent out the bedrooms, and that's when they would need a renter's policy.
When it seemed like the world had stopped, as if our normal would never be again. Confinement Chronicles.
Still, there were those who held fast to hope. These are their stories. From teachers to dads to nurses on the front line, they have chronicled their messages of hope. Confinement Chronicles, now available. Order today on Amazon, also available in audiobook or at laderopress.com.
Confinement Chronicles.
Mental Health Through the Pandemic by Christopher Swansburg. Through the outbreak of COVID-19, we as a nation have had struggles. Our government ignores the experts. Our jobs are looking for loopholes to stay open as essential jobs. Our work hours are reduced. Millions become unemployed. Toilet paper is sold out across the country. Audiobook produced by Angie B. Productions.
Welcome back. And we had our guest, Ashley Hand from Kincaid Insurance Agency, talk to us about some of the policies that she has come across: auto insurance, home, commercial, and farm. She is located in Tifton, Georgia. I have worked and known Ashley since we moved back to Tifton over 20 years ago. Very good friend and very knowledgeable with insurance. So I'm so glad she was able to join us today to give us a little update on our auto insurance and how important homeowners, renters, and commercial insurance is. If you have any questions, feel free to text me, 229-392-6983. This is insurance doesn't matter until it does. And I'm so glad you're joining us Saturday morning at 8. Hope that some of the topics we pick were helpful to you and answered any questions. So thanks for watching us today, and we'll see you next week. Have a good day. Hi, everyone. This is Insurance Chat with Debbie Scarborough. I'm from Tifton, Georgia, and I'm married for 35 years. We have 2 boys and 1 grandson, 4 cats, 3 dogs, and a turtle. Text me your questions. That might help for our next episode. Want to make sure all of your questions get answered. Help bridge that gap between insurance language and what we need to know today. When we're dealing with our home and auto policy, we hear the word deductible. When we're talking about long-term care, it says elimination period. Well, they both mean the same thing. That's what you pay first before the insurance company pays. So there's a variety of products, especially with medical insurance. Most of us are seeing our deductibles $3,000, $4,000, $5,000. So today is probably more than ever that time when we need to think about a supplemental policy. So make sure you text me some questions that you may have about some of your insurance. So thanks for watching, and I'll see you next week. This was Insurance Chat with Debbie Scarborough, and I hope you have a great week. Thank you. Good morning, everyone. I'm Debbie Scarborough with AMBA. It's Insurance Chat with Debbie, because insurance doesn't matter until it does. I'm so glad you're joining us today. I have been in the insurance industry for 22 years. I have been with AMBA for the last 6 years. I will have to say I love this part of insurance the best. Most of us are familiar with medical insurance because we have to have it. We have to have home and auto insurance, but there's a lot of supplemental type policies. Just like myself, for many years, I just sort of ignored because I didn't really know anything about them. Did you know that Medicare, in your Medicare handbook, they recommend long-term care? Life insurance is so important. So many people don't have life insurance in play. They think, I've got plenty of time to put that together. And MASA, our ground, air, and ambulance plan. I'll be honest, the first 2 years I was with AMBA, I probably still didn't understand the need for that policy. But I meet people every day that are very thankful that they had a ground, air, and ambulance plan in place. So don't hesitate to call me, text me, email with questions about insurance. And if you're ready to put one of these policies together, I am a licensed insurance agent in Georgia, Florida, Alabama, and Tennessee. The good news is AMBA is licensed in every state. So if you're in a state that I'm personally not licensed yet, that just takes a couple days to get licensed with that state. The good news is I don't need a license to sell you a MASA plan So if you're in Michigan, California, Texas, Pennsylvania, you can purchase a master plan and it be effective the very moment you call me. We put that in effect, and rates are low in $24.17 a month in Florida, $27 a month in every other state. So great plan to start for your family. Can cover you and a spouse. What about children? If your children are living at home and under the age of 26, they can be included for that $35 a month to be included in your plan. I put one in effect for my husband and I several years ago. I also have one on my two sons because now they're out and about. They're 24 and 26, so they don't live at home anymore. So they each have their own plan. I choose to pay for it because I know at 24 and 26, they may not see the importance of this plan, but mama sees it, so I pay for it. We do have dental plans, vision insurance. Our dental insurance is with Emeritus. Our vision is with BSP. We have cancer insurance. October, Cancer Awareness Month. So if you have looked at a cancer plan, that's awesome. But if you haven't put one in place, let's chat about why you haven't put a cancer plan in place. A heart and stroke policy. A lot of people put a cancer plan in place for a lot of different reasons. They kind of forgot about a heart and stroke plan. We have a great heart and stroke plan with Cigna and Mutual of Omaha. Which plan is best for you depends on your needs, depends on your medical history. Diabetics, we know that your chances of a heart attack or stroke have increased. So Cigna will take you even if you're diabetic, as long as you're not on insulin. So if you're on insulin and you still want a heart and stroke policy, let's look at Mutual of Omaha. Mutual of Omaha will accept diabetics on insulin as long as your A1C is 7.0 or less. So talk to an insurance representative, maybe someone that you know, or chat with me. My cell phone number, you're welcome to text questions. You're welcome to text for advice. Even if I don't sell you my product, I will gladly help you look at your plan. Good morning, everyone. Good morning. Good morning. I have a special guest today. Bartee has some life insurance questions. I know September was Life Insurance Awareness, if you didn't know. So we're just continuing with our special guest that talk about some life insurance questions. How are you, Mr. Bartee?
I'm doing great today, and thank God for doing great. How are you?
Good. Can't complain.
Okay.
Or should I say that would be a different show?
Yeah. Yeah.
So insurance is always fun to talk about, but I know also too we get stuff in the mail all the time, and what's good, what's not, what should we look for. So I understand you've got some mail.
Yeah, well, the mail is not mine, but I had several of these type of forms that come through the mail from credit unions. Mm-hmm. My wife happened to have one. Matter of fact, AAA, they give you the same, everybody's given $1,000 worth of free coverage. So they say. Now I want to find out, is that actually free?
I think so. I think from a lot of your banks, credit unions will send those forms. There's always a catch. The catch is they hope that you'll take that $1,000 and then purchase more. So I know a lot of people that will just take the free $1,000 here or there. The problem you got to keep up with when it's free is most of the time, how do we know we have life insurance? If we don't have it specifically spelled out for our family or the people that are going to take care of our estate, then they don't know where to find it. So if it's free,
then you can't look through your checking account. Oh, I see he's been paying Mutual of Omaha or State Farm or somebody this. Oh, let me call them and see what insurance they have. So, hey, if it's free, take advantage of it, but make sure when that policy comes in the mail that you're putting it with those important paperwork, because a lot of companies offer that free life insurance while you're a customer of theirs. So I would check the fine print too to make sure that, that policy is only there as you're a customer. So what happens if for some reason you leave the credit union? Will it stay there? So you'll see a lot of that when the policy comes in the mail, looking at the insurance company paper that it's on, and just making sure you've stuck it together with those paperwork. And of course, they're counting on you chiming in and buying another 5 or 10,000 so they can get some money.
Yeah, I'm reading this policy and it says current coverage $1,000. Premiums paid by the credit union. Mm-hmm. But now it has coverage amount $100,000. Members only $10. Family plan $15. Can you tell me anything as far as what your insurance coverage would be for $1,000?
Yes. So
I'm sorry, $100,000.
Yes, I would be careful when you look at big amounts like that. 100,000, probably down there on the fine print is a term. So 100,000 is good for 10 years, 20 years, or 30, depending on your age, is how much you can buy. So when I see that flags to me that if you bought $100,000 worth of coverage for whatever the amount was, it is probably a term life insurance, meaning it's going to end at some point, and kind of not really end, but that $10 or that $20 is going to end after 2 years, and you'll be able to continue it at a very high price. And most people don't, because we buy term insurance when we're younger to cover a mortgage, to cover family, those things. But so I would say that policy right there is 9 times out of 10 a term policy for $100,000. That $1,000 free is probably there as long as you're a member of that credit union, or I would want to read the fine print. And it's usually that fine print that we have to get the bifocals out or the magnifying glass to see for it. So they're trying to offer a good thing, but it's usually term.
Okay, now, what if a lot of people, now I know a lot of people get these in the mail. There's a lot of people alone. For me, I tear them up.
I do the same thing. They go straight in the trash, just because I don't want $10,000 policies all over the place, or I don't want 3 or 4 life insurance policies. Now, I do sit down with people who say, oh, well, I've got this policy, and we kind of add them up to see, how much they have, and is that enough? And, they'll say, oh, I have this $2,000 policy with so-and-so, I don't pay anything on it. So I'm not discouraging you from doing it. Hey, take advantage of the free part, but just make sure, be wary of how much more you purchase, because also too, when you purchase more, there may be some fine print that says there's no health questions. Well, okay, when there's no health questions or no nurse visit, that brings up the question of a graded policy, meaning it's really life insurance with a 2-year waiting period. If it's an auto accident, it would pay out immediately. But if it's not, and it's health related, it's going to return your premium to your beneficiary and not pay out the death benefit amount. Is that still a good policy? Sure, it's still a great policy if you're one of those people who couldn't get life insurance another way, meaning you're healthy and you're paying more for it. So a lot of times when they send out those general things, everyone qualifies, no health questions. They're trying to get the healthy people to come in to kind of counteract with the unhealthy that come in. So that's the other thing. If you find yourself not being able to get coverage at all, then I'd say go for it, especially if the premium fits your budget. But just be wary that you know what you purchased. You know that you purchased $100,000, sounds great, but it's only for 10 years. Or just take advantage of the free. Something is always better than nothing. And if you can get a couple of those policies together, they do add up to be something.
So you're saying with term life, there is a term. And,
correct.
So if you're able to get one that, say, what is the normal term for term life?
They vary. A lot of the term policies start as low as $50,000 up to $2, $3, $5 million. So a lot of times it depends on where you're at in your life. You know, when we're younger, we're recently married and we're raising a family, you know, traditionally the husband would have his salary times 3. There were different formulas that they used to decide how much insurance you need. Then a lot of times a growing family may list their mortgage, what it would think to get 2 kids through college, those things. Then when it was become to see how much the spouse would need, you know, if a spouse wasn't working, well, you're still having to replace that spouse with daycare and those needs that would need to cover a growing family. So when we maybe retired and maybe the mortgage is almost paid off, I get a lot of people that bought just a $50,000 term insurance for 10 years because he knew he only had about 10 more years left on the mortgage. Or it could be, I've come across a couple people who maybe couldn't get insurance the other way or couldn't necessarily afford a whole life policy, because a whole life policy locks in the rate. It never changes. So when you buy a whole life policy, usually start looking at that at age 50 and up. You lock in that rate, you choose an amount, and the premium never changes. It builds some cash value, and that cash value is there if you ever want to take from it. Now we have a universal life insurance policy that's very popular, especially for those that are younger can get that. And it's a universal policy. The best way I like to explain it is if you've heard someone say, hey, that life insurance paid $10,000 plus interest. Well, that's basically what a universal policy is. There's a lot of things going on behind the scenes, but basically what they're doing is they're taking half of your premium going towards your death benefit. The other half is actually being invested. So it's growing, and is why there is sometimes after 10 years, 15 years, 20 years, there's actually some cash value built up that you can take a loan out against, or that you can just take out and you still have your death benefit there, but you've able to take some of that cash there. A whole life policy builds cash value, but if you take $5,000 from that whole life policy, it decreases your death benefit. And you take it out knowing that you're going to either pay it back or you're okay with your death benefit not being that high. So, you know, there's lots of things to kind of consider when taking out a life insurance policy. So some people that'll get those $1,000 things from their credit union or otherwise, they'll just take them just because, hey, it's free, let's take it. But most people will do, if they don't have life insurance, is kind of take out a little more, and that's what they're counting on.
Okay, let's talk about two things. First, you were saying about the old days, they take half of the man's 3 times his check.
Yes.
Why it has to be the man?
Well, because years ago you were the breadwinner and the wife stayed home and raised the family. Of course, that's kind of not true now. Now both are working. So now when someone 20 something or 30 something are sitting down to talk about life insurance, sometimes it could be equal, or sometimes it's the female that is making more money. So she may need more life insurance than the man. But a lot of times it just depends on your situation and what you want to leave for the other. Sometimes, some spouses, one might have a better retirement plan than the other. So there's lots of little things to consider when you're deciding on life insurance at 20 and 30 now.
Okay, you talking about back then in the 1800s then. I understand. But now, the second thing with this whole life, you say, okay, say I take $5,000 out if I had a policy. Now, would I have to pay income tax on that money?
No. So that money, once you pay into that policy, and that is your money. So if you take it out, you don't. And that's the beauty of even the universal life, is you don't pay taxes on that money when it comes out. So that's kind of that nice thing, is why people like the universal life insurance, is it still has its death benefit, but then there's some cash value there that they take out. Maybe they take out to repair the roof or put windows in the house.
That sounds good for retirement people. Put their money in insurance like that, then you don't have to pay tax. Would it work like that?
Yes, the universal policy, for my son, for instance, he's 27. You can use that universal life insurance policy as income later. You still have your death benefit, but in 20 or 30 years, that policy would work sort of like an annuity, where it's paying out $500 a month, $1,200 a month to you as income that you're not paying taxes on.
That sounds good to me. I should have talked to you earlier.
Yes.
But now that I know, I appreciate it.
You're very welcome. Don't hesitate to ask questions and find somebody you trust, maybe not somebody who just sells life insurance, because what I found sometimes is you'll talk to some people and all they offer is term insurance. Well, that's all they're going to talk to you about. And I can probably convince you that a term policy is better. Just like I could only sell whole life, I'm going to convince you that whole life is better. So kind of talk to someone that's going to talk to you about all of them to find out what that need is. Because right now our universal plan, I've been selling it a little more because it is less expensive than our whole life product, and you're able to get more insurance. Our universal starts at $25,000 up to $300,000 is easy. Our whole life product you could get as low as $2,000, only up to $40,000.
Okay, but you know what they say, you get what you pay for.
Yes. And sometimes you got to just get something, because something's better than nothing. I mean,
yeah.
I know a lot of us think, I have people who say, well, I have money in the bank to pay for my funeral. Well, that's great. And I commend you, and I commend you for doing that. But make sure you designate that's what that's for. And a good way that you could do that right now is to go into your funeral home and prepaying for your funeral. Well, kind of what they're doing is buying an insurance policy with your money. So today an average funeral cost is $9,000. You can buy a funeral, and in 10 years, 20 years, that same $9,000 you spent is going to go into an insurance policy and grow, so to be able to pay for your funeral. That way, all of your money, we don't know what our last day is. We don't know what our last year is going to be like. We may drain our savings account for long-term care. We may drain it for hospital stays and care. So we've done such a good job on saving some money to pay for that funeral, but then we've drained it for other reasons. So I would encourage to go talk to several. If you have a preferable funeral home you like, go talk to them and see what options they have. Hey, I have $10,000. I would like to go prepay for my funeral. And you'd probably be surprised at some of the advantages of doing that. You can even buy your headstones and buy some of those. So
yeah. Now, what if they go out of business? That's my only concern with all that. You prepaying, and everybody talking about yes, and what the gimmick is for the rest of your life.
Yes. Well, the good news about the funeral homes that you do that with, you're actually buying an insurance product from Mutual of Omaha, Philadelphia Life, whoever. So you're really not purchasing your funeral from that funeral home. They're taking your money and buying a policy with a life insurance company. So there's zero chance, I won't say zero chance, but there's little chance that your insurance company is going to go out of business. Yes, your funeral home will, and that's okay. You get a policy in the mail just like you would if you bought a life insurance policy. So if that funeral home is out of business, you're contacting that insurance company that sold that product through them.
Okay, now, I got a question for you.
All right.
Are all amenities based on the stock market?
No. The good news is we have a fixed indexed annuity, and it is not tied to the stock market. Your variable annuities are tied to the stock market. So you want to be careful on which one you put money in. Most people want to go to an annuity because they don't want the risk of the stock market, especially right now. If you're over 60, you don't have 10 years for that 401 or that IRA to build back up money. So the good way to protect that is with an annuity. Our fixed index annuity, and any fixed index annuity, you put in 50,000, 100,000, you're never going to go below that. Every year or every 2 years, your interest is just put on, and then the next year and the next year. So your value will never go below. You may not earn any interest based on the stock market, but you will never go below. And then when you annuitize with an annuity, that means you're ready to retire or just ready to have income come. You can choose to have 500, 1,000 for the rest of your life. Even if it drains your annuity, your annuities have those riders on it so that you've got guaranteed income for life.
Okay, now I have a personal question. I don't know if you know anything about, since you were speaking on annuities, I'm with Nationwide. That's where my money is. Now, I received a letter from Nationwide maybe 3 weeks ago. I had a fixed rate. I was receiving 3.5 interest on my money, no matter how the stock market went. Now, the letter I got about 3 weeks ago saying that now it's 2.5 in October. Now, shouldn't I already be grandfathered in since that's what I went in with? Or how that works?
Right. Yes and no. Normally how that works is you're only guaranteed that for a year. We had an annuity a company that we worked with, and it was great because we were getting 3.5. Well, that was great when you moved that money in there first, but then the second year it went down to 2%. So it's generally you're getting a letter either every year or every other year telling you what the interest rate is going to be. The good news with our annuity, our fixed index annuity with Emeritus, the lowest it has averaged over the last 10 years is 4.45. The most it has earned is 8.06. So it's a great annuity for that. And then when you annuitize, you're guaranteed not to go below 3%. So never hurts to look at that. We've got a great in-house company reps that help us look at what you have and show you what Emeritus, or I call it Emeritus, but some call it Emeritus, has to offer. And this fixed index annuity is a great product because it's offering a higher interest rate. We've got a lot of people that move a CD over because those aren't offering nothing, or a money market account. But we have moved over many VALIC accounts, many other companies, because they're getting 2 and 3%.
Okay, well, I appreciate all the information you've given me, and I need
You're
to take
very
that into
welcome.
consideration, and especially about the funeral insurance. I think I might have to purchase a policy there, since you're saying it's, regardless, that is for the lifetime of the whoever is getting the policy. Everybody come up with that gimmick. Your car guarantee, we guarantee lifetime. So okay, I appreciate
Very
you.
good. Well, I am glad you came to visit with me today. And anything else I can answer for you, feel free to chat. And
What is MASA?
MASA is our ground, air, and ambulance plan. So that takes care of your out-of-pocket expense if you go by ground or air ambulance. Most people think that our medical insurance does everything, and it does a great job, but everything now is out of network for the most part. Our ambulances are not owned by the local hospital or the county anymore, and they don't want to be in network. So most of us know on our medical insurance what their in-network cost is, right? Because I see a doctor in network. I know my hospital is in network. I know my pharmacy is in network. But nobody really looks or realizes that the ambulance company is out of network. They don't find that out until they go by ambulance and they get a bill. So MASA pays 100% after your insurance pays. They pay every dollar, no deductible, no co-insurance, and no network.
You say after your insurance pay?
Correct.
So who they get the money to?
Yep, they pay. So what happens when you file a claim on MASA, when you get that invoice, you text me a copy of it and I send it to MASA, and they find out if your medical insurance has paid their part, they will pay the difference.
Oh, okay.
Yeah.
Okay.
If, you have enough, just like when you get to the hospital, if you say, oh yeah, I have MASA, they ask you who your health insurance is with, you give them your card. If you think hey, I've got my MASA card here, they'll bill MASA directly. A lot of the places are familiar with MASA. But if they don't, which is what happens to most of us, we get that bill in the mail. You just contact me, snapshot a picture of it with your phone, text it to me, and I send it to MASA, and they pay based on the invoice. They don't care if insurance paid 0 or paid half of it or 75%. They'll pay the rest, and they'll send that check directly to the ambulance company.
Okay.
Very good. Well, thank you so much for your questions.
That's it. What is the one more question.
Yep.
What is the accident clause?
Oh, an accident plan is usually an insurance policy that most of us get when we're working or when we're younger. You'll see it offered. Sometimes it'll be offered as a rider to your life insurance plan if you die by accident. Then an accident plan is, if you're working, someone like me, if I'm not working, I don't get paid. So an accident plan helps pay your money directly to you. The best way to explain it is we're all familiar with the Aflac commercials.
Yes.
They're very popular. So an accident plan is just that. It pays based on your accident, how many times you went to the doctor, if you went to the emergency room, if you stayed overnight, if you went by ambulance. It's an indemnity plan that pays directly to you. So that means what you do with that money is up to you. Now, you'll first thing we'll use it for, obviously, or help pay our co-pays to go into the doctors or things like that. But if it's extra money, you can use it for whatever you need to pay for groceries or anything that you need. So an accident plan is a very good thing to have. It also helps for those things like an accident. Car accident, for instance, it may take you a year to 2 years to settle with that insurance company. You may be, most of us, I hope, are driving around with more than the minimum state required limits, but because of things that are happening behind the scenes, we may not get that money first. But what is going to happen, if you're going to a chiropractor and your medical insurance doesn't cover it, you're having to pay those things up front. So an accident plan is going to pay either $50, $100, $300 every time you go to the doctor, every time you have an x-ray, depending if you had stitches. So that money can add up to be a nice amount of money to kind of supplement what's happened in the event of an accident. Had a friend that fell and broke her front tooth, and we know implants are very expensive. So that money from that accident plan allowed her extra money to pay for that implant.
Oh, okay. Well, I think that's going to be all of my questions
Good.
for today. Thanks for inviting me on your show.
You're very welcome. And we're going to take a quick commercial break, and we'll come back and answer some more fun questions about insurance, because insurance doesn't matter until it does. Thanks, Bartee. Hi, everyone. This is Insurance Chat with Debbie Scarborough. I'm from Tifton, Georgia, and I'm married for 35 years. We have 2 boys and 1 grandson, 4 cats, 3 dogs, and a turtle. Text me your questions. That might help for our next episode. I want to make sure all of your questions get answered. Help bridge that gap between insurance language and what we need to know today. When we're dealing with our home and auto policy, we hear the word deductible. When we're talking about long-term care, it says elimination period. Well, they both mean the same thing. That's what you pay first before the insurance company pays. So there's a variety of products, especially with medical insurance. Most of us are seeing our deductibles $3,000, $4,000, $5,000. So today is probably more than ever that time when we need to think about a supplemental policy. So make sure you text me some questions that you may have about some of your insurance. So thanks for watching, and I'll see you next week. This was Insurance Chat with Debbie Scarborough, and I hope you have a great week. Thank you.
Hello there. I'm Laretha with Lolo's social media promotion, about to bring you a special announcement. Log on to learn, laugh, and feel the love of motherhood as the tour that Angie B presents brings you our virtual Moms in Ministry workshop. There will be 3 mothers in various stages of motherhood to share their experiences. We'll answer your questions and operate as instructed in the book of Titus, chapter 2, verses 4 through 9. These older women must train the younger women to love their husbands and their children, to live wisely and to be pure, to work in their homes, to do good, and to be submissive to their husbands. Then they will not bring shame on the word of God. In this way, encourage the young men to live wisely. Produced by Angie B. and Bartee Productions. Promotional consideration by none other than Lolo's social media promotions. Follow us online at www.facebook.com/the tour that Angie B presents. See you then.